Welcome to DairyPod, a podcast series from Dairy Australia. Featuring a range of experts, each episode offers insights into Australia's unique dairy farming conditions, as well as personal experiences and the latest in dairy innovation.
Thanks for joining us today for our annual Farm Business Management webinar. This one is focused on tactics for the year ahead to help us step through some of the key decisions farmers are facing as they plan. We'll cover planning and responding to milk price announcements for the next year, managing the impacts of increased costs and tighter margins, and making tactical decisions for managing the herd, feed, water and cash flow. The focus of today is not to provide a one-size-fits-all advice, but to help farmers ask better questions, understand their numbers, and know when to seek support. I'm joined by farm business consultants Fiona Smith from West Vic, Tom Farran, Murray Region, and Matt Harms from Gippsland, who each bring a wealth of different perspectives from across farm business performance, analysis, and farm systems. So let's kick off, maybe one for you, Matt, as we start and look at planning and responding to milk price announcements for the next year. What sort of considerations do farmers need to think about when unpacking an income estimate and things like comparing like for like? Tell me a bit more about that, Matt.
Yeah, thanks, Greg. Look, it is that time of the year when everyone goes into a flurry, and some people are really used to this process. They do it almost annually and are quite familiar with it, and others have never had to face this situation before in their farming career. So, some people are completely unfamiliar. And what I always encourage is to essentially have your monthly litres fat and protein, and that could be fat as kilos or percentages, doesn't matter, for each month for the year. And that allows you to essentially provide that to a processor that you might be looking to obtain a price from, and they can have a look at that data for you. So that's number one. But in that process and in that comparative process, you really need to make sure of some key, relatively small but really important factors. One is, probably the company that is looking to get your milk will probably want to do it all in premium quality. So there could be quite a significant difference if all the milk you sent was slightly downgraded. It's not a casting aspersions on how you make your milk, but the price will be significantly different. So you need to really make sure that the comparison of quality is even, and understanding what those quality parameters are, and we'll talk about that a little bit later. Pickup charges, whether companies will actually do second pickups and what those charges might be, or what the initial pickup is on a daily or skip a day basis, because they vary a fair bit now. And the other thing critically too are things and where things like commitment bonuses and sign-on bonuses may appear in an estimate that's provided to you from another company. Is that being shown on that estimate, or is it not? And probably critically too, when something like that actually appears in your bank, is that going to be something that appears August the year after, or is that going to appear straight away? So really being sort of quite up on all those smallish but important and critical things in comparing like for like, and making sure that we are actually in the same ballpark, or comparing apples with apples, if you like, Greg.
Yeah, thanks, Matt. There's some really good things to consider up front. Fee, I know you spend a lot of time in this space as well. You've said to me in the past just the importance of understanding the terminology, right? Like that plain language, because it's not always as clear as what it could be, hey?
No, I don't think many people would look at an income estimate or contracts and think they're in plain language. I don't think many people spend their time thinking that. That's why they often have to get pen to sort of help them out. I think be really clear about, you can't change the wording in your income estimate or your contract, but you just want to make sure that you understand everything. And you certainly want to make sure that you understand the clear stipulations in any contract that you have that might impact things like, as Matt said, milk quality, payments, capability to get out, if you're wanting to get out at some point in time, what the restrictions are. And I think the other one to be really mindful of that I speak to a lot of my clients about is if they're looking at multi-year contracts, just being really clear that they're protecting their downside in that position. So trying to make sure that wherever possible, they will have a minimum price in that, but capability of upside if the market moves up in future subsequent years. But yeah, and I think the best thing is, Greg, if people aren't sure about it, it's best to reach out and ask someone, because you don't want to get stuck in a circumstance where you weren't 100% sure, sign a contract, and then you're stuck in that situation.
Good insights, Fee. And Tom, I know you've quite a deal of experience advising your farmers around multi-year contracts as well, and this seeking advice, it's pretty important, isn't it?
Yeah, thanks, Greg. So unfortunately, I got very similar message to everyone else in this regard. So we're at that time of the year where we're looking to get our best deal we can for our milk price, and it can be significantly different for farms between different processors. So just to reiterate, for a lot of time, we had a discussion group this week where we're talking about it, and we worked out realistically a farmer could spend maybe an hour chasing up different prices, and it could make it, depending on the size of the farm, but it could be like $20,000, $30,000, $40,000 difference for that 1 hour spent. So it's well worth the exercise. A suggestion that the group come up with was you just simply draft up one email and send it to the different processors. And as Matt said, that's where you put in your monthly litres, fat and protein, and send it across. And then when we're looking at them, whether it's a 1 year or multi-year contract, there's a few things just to reinforce what's already been mentioned, making sure you understand the standards. So with this quality standards, so we're seeing that some companies can have significant differences in what they accept or penalise. The penalties they apply can be different. It's often a percentage, and some might be, say, 3% for a downgrade, and others might be 5%, and it can add up if you're likely to need that. Another one I've been seeing is that a number of farmers battle with milk fat suppression at times of the year. Most milk companies do have a minimum fat percentage they require, so making sure you understand the consequences if you go under that, what it might be. And the other one is that we often see a lot of verbal promises when people are looking to sign up. So the factory field office will come out and they'll talk about, this is a contract, but we're going to do this, this, and this. Just need to understand that isn't a contract, that extra bit. That's just what they're hoping to do. It's not an actual promise or a contract. So unless it's in the writing part, you probably need to ignore it. And that's the same with promise step up. So I'd be reluctant to ever go with a company on a promise of a step up. They need to build it in the actual minimum price guarantee.
Have it in writing, right?
Yep.
Good stuff. Maybe a question to either Matt or Fee as well. What about things like supplier support payments or those sorts of things? Should we be budgeting on them up front or consider that down the track?
Yeah, Greg, this is a new space, if you like. We were under the guise that milk pricing would get simpler and more transparent, and here we are. We're talking, another terminology again. So you're quite correct. Some companies, or in fact, most companies have put some sort of statement around that in their opening price announcements, but not all. Some are much more fluid in terms of how they're treating those supply support payments, and others have committed to it for a longer period of time. So I think it's been, a matter of being really aware of where that sits. And I think just the other one too, following on from what Tom was just saying. Down to that really practical level, how's a company going to treat a hot milk load or an antibiotic? Are they going to pay one a year or allow one a year, or is there a no tolerance, zero tolerance policy to that? Because that has pretty significant implications on farm. If you have to, which things happen, sometimes you do have to dump milk.
Good stuff. And Tom and Fee, I'd imagine you'd endorse that, right? Because there's often variability between processes around some of those considerations Matt's just mentioned, hey?
Absolutely. Well, I think there's a big variation in those. You want to be 100% sure that, particularly if you're moving to another processor, you probably know the standards of your own processor at the moment, but if you're considering moving, then you've absolutely got to be across that, because the penalties can build up pretty quickly. And I know a lot of people also have insurance in terms of on their milk, so that if that does happen, at least they do have some protection around it, but ideally you'd hope not to have to use it.
Gotcha. Good stuff. So any other considerations around opening milk price and contracts from any of you? Just final thoughts?
I'll just
Tom?
quickly, just on the contract one, because I do deal with a number of farms that go onto the 3-year type contracts. More often than not, we're seeing them now, they've got a 2-year price that they're pretty happy with, and then the 3rd year is often a minimum price guarantee. So it's quite important if you're going to sign one of those that you understand what that means, and often they're promised that they're going to come up with a matching price or something in that 3rd year, but it's not normally written in the contract either. So just be aware of that.
Gotcha. So maybe just to close off this section, a final thought from each of you are around when to seek advice. When do you see the best outcomes for farmers who might be a little unsure about what's on offer?
I think if you're not sure, and Matt and Tom have already mentioned that it can be the difference of 20, 30, 40, 50,000, it's worth getting advice. It might be an hour's worth of advice to have that difference. So I think if you're not sure and you're not comfortable with it, this is probably one of those ones that will have a pretty nice return on investment if you just spend that time on the advice from a specialist.
Gotcha. And Matt, what's your sense on this?
Yeah, look, I've said to a few clients, gather the data and the information, and if you're unsure, flick them through an email to me and that sort of thing. So, people like Tom, Phoebe, myself, and others around the country are usually quite comfortable to do that with clients, and we're used to looking for those sorts of things we've just been talking about. So, I'd just encourage it, if you're not sure how the process works, ask the question.
Gotcha. And Tom, yourself, I'd imagine you spend a bit of time encouraging farmers to proactively ask questions, right? Instead of just, as you say, making assumptions and not having things written down.
Yeah, I think I can add that Fiona and Matt didn't just say was there is no rush to sign up either. So don't feel you need to sign this week. You've got until at least the end of June, if not even longer. And recent history has shown that the farms that signed up in the first week of June don't always end up with a better deal. That you can't always rely on history, but that's certainly the case on a number of occasions last year.
Gotcha. Good stuff.
Greg, can I just add in too that, we probably, times are a little bit more uncertain with processing costs and things that the processors are going to incur. And there's no guarantee a particular company might pick up in that area anymore, or may, if you're in an outlying area, it may just be a little bit more challenging. So, ask those sort of questions too. Are you going to pick us up this year, but is that a long-term arrangement? Rather than something that might change in the near future. And we've seen significant changes in some more isolated areas in that regard.
Fee, knowing your numbers, never been a better time just to be across where you're at and have a process that's sound and achievable, right? Those practical approaches. What's your sort of sense on farmers that generally stay on top of their numbers, that know where they're at? How are they performing?
They consistently performing very well across years. Those farms that understand every part of their business, all the physical and financial aspects. I think the ones that, and I realise that I'm just marginally biased in this, but I think we all should be. If you don't know what your numbers are, it's really hard to make decisions in these circumstances. So it's really hard to know what changes you should make in your business if you need to make changes, or where you can pull in the belt. Like if you're thinking it's going to be a bit tighter on cash flow this year, if you've got a cash flow, or you have a dairy base analysis, or you've got some farm management accounts out of, figured, use those to make sure that you know what the position is going to be for the coming 12 months. Yeah.
Gotcha. So try and make it easy on yourself, right, Fee? Is that kind of the message here?
Ideally. Not everyone loves doing numbers. I know that there are very few farmers that put up their hands and say they love analysing everything about, their financial statements and their profit and loss. But I think this is the time that you want to, and particularly as you are going into getting income estimates and, pressure on costs, it's a good time to understand all of that. Yeah.
Gotcha. Good insight. So maybe Tom, across to you in the work that you do, and especially more recent times, which numbers are good to know? What are your farmers focusing on at present to make sure that they are staying on top of their current position and managing their margins?
Yeah. So why cash isn't a good indication of how well the business is travelling at times. It's also an essential part of managing a business, have a good cash flow. And so essentially that is often at this time of the year, the starting point is understand what your cash flow is going to be for the year ahead. So making sure you can actually pay your bills when you need to pay the bills. And so that way you can plan your year better around it when you've got a better understanding. So it might be that you want to do some capital work this year. If the cash flow showing is going to be really tight in these months, you might be able to then delay it. And also, to be able to do a good cash flow budget, we've obviously got to do some physical budgets to help inform it, such as milk production, milk income, feed and water budgets come into it as well. So while there's lots of numbers I like to look at, that is probably the starting point at this time of the year. And as we're heading towards the end of the financial year into the new one, as Fiona just indicated, a really good spot to start with this is to do an analysis of the previous year. So using your dairy base or something like that to get a really good understanding of where the business is at, to see what parts that you can change and what parts are working well for you.
Good stuff. And whilst none of us would argue the importance of the actual financial numbers, the physical ones can tend to get a little bit lost sometimes in the process, can't they, Matt? So just talk to me about the importance of knowing your physical numbers, those milking areas and support areas and that sort of stuff.
So true, Greg. People probably get frustrated when I turn up at their place, and almost the first question after we've got into a bit of work is, how many cows have you got? What are your heifer numbers? What rising ones have you got? What fodder have you got on hand? All those sorts of things are absolutely critical. And it sounds like a no-brainer, but I would say at least half the visits I do, people cannot recall those numbers relatively easily. And so it is absolutely critical to have those sorts of things. You need them for 30th of June for tax. And so, now's the perfect time to gather that. And as Fee said, if you're going to be analysing your business, now's the time that you need to know those numbers. But it's really important as well for planning. If you've got an excess of numbers and we're heading into a year where, fert prices are pretty high, there may be the opportunity to not so much reduce numbers, but you may actually have surplus stock, and they could be pretty critical for cash flow in those first couple of months of the year, especially with prices, stock prices where they are. So, there may be an opportunity to sell 10, 20, 30, surplus animals to boost cash flow in that critical time. So it's to know your position now, but it's actually to do that planning, and that planning could be significant in terms of extra feed requirements or extra fertiliser requirements, or, as I just said, extra cash flow opportunity that could be sitting there in the paddock.
Yeah, good point, Matt. And sometimes there's carryover impacts from previous years or more profitable years as well that you kind of need to take into consideration as well, right?
Yeah, because we're going to be getting into, there's been some good years just behind us in a lot of areas. And, we really need to be mindful of where we're sitting. So we'll certainly be talking tax shortly, but, that's going to be critical to know. Fodder position is going to be absolutely critical to know as well. I'm certainly, we were pretty cleaned out across the country last year. I know that. But, in some parts this year, there are pretty good stocks of carryover fodder. And so, again, knowing what you've got, knowing what's on hand allows you to do that planning, Greg.
That's a good insight. And Tom, often the best decisions are often as an output of some assistance or engaging with the consultant and so forth. What sorts of assistance should farmers be looking to engage with this time of year?
Yeah, so there will be a bit of regional differences across Australia to a small extent, but I always have a couple of key times of the year where I reckon planning, reviewing is really critical. So I always start with July, August, really important time of the year. So it's a good chance to analyse how the business went last year, understand the numbers from that year, so you can therefore use it to inform the current year we're into, so you can plan out your cash flow planning around then. And it's once again with your tax accountant situation, you can plan your strategy well ahead, because when we turn up to them on the 20th of June and say, I might have a tax problem, it gets pretty limiting what you can do. But if you've identified it back in August, you can sort of plan a year around it. So I reckon that's a pretty critical time of the year to look at the financial part of the business. Then for most regions, I reckon late September, October is our next critical period, so we have a better understanding what the spring's likely to deliver, so we can do our feed and water planning, whether we're going to summer crop and those sorts of things. And then we flow through until the start of the autumn. So for Northern Victoria, generally February is a really key planning month for how we're going to set up the year ahead from our pastures and cropping point of view. And then by about April, we've got a pretty good understanding of how closely we're matching budget, and so hence we can finalise our tax planning. And the thing I'd say, a difference I'm starting to pick up from the last 10 or 20 years ago, is that dairy farmers face a lot of trouble with staff in recent years. They're not the only industry that's facing that. And so I'm finding accountants as an example, but a lot of service industries, they are also often a little bit understaffed. And so we're not seeing them. Some are, but some others aren't being as proactive as they used to be. And it's really the business manager that's got to start driving these discussions rather than wait for the accountant to ring up and organise it. We're seeing that the need to be on the front foot to get the timely planning in place is becoming more important rather than relying on someone else to give you the prompt.
I'm going to throw
good
in one
insights.
extra time. So the only other one that I think is good to just do, it's not necessarily planning, but it comes back to both Matt and Tom's point. I think once you've finished harvest at the end of spring, it's not so much a planning one. It's more that's a really good time to take note of the homegrown feed you conserved, because we consistently go on to farms. And contractors often now will have, ton dry matter or as fed of the silage stack, but it's just a good time to go out there and run along the silage rolls if you need to count them out if the contractor hasn't got that count sitting on their invoice. Because as Matt said, by the time we get there, July, August to start collecting their data, they're like, oh, God, I've got no idea how much I started with and how much I've got left now. So I just think that time at the end of harvest is also a really good time to just note down some of that information.
Good insight, Fee. And just touching on Tom's comments around taxation, planning for cash flow, those sorts of things, Fee, what other considerations are kind of topical at the minute around that space?
Yeah, I think, obviously, if you call your accountant or probably your banker today to say, I want to do some tax planning, don't blame us, I would say. Probably they won't be super keen to get, I know bankers expect calls at this time of the year to help out with tax planning. But I think the other things to be mindful of at the moment is that we've got some proposed tax changes that have been have come out as part of the budget. I think some of the key ones to be aware of at the moment, farming, agriculture has got some exemptions at the moment under some of the trust side of things. Capital gains tax is probably the one we possibly haven't left enough time for a lot of tax planning for this year, but I think a critical thing will be CGT changes that are proposed for 30th of June next year. I think that's something that people really need to be across. And I think, Tom, you've just talked about places like accountants having a shortage of staff. I suspect valuers for the leading up to June next year are going to be very under the pump in valuing land. So if you're contemplating that and your accountant advises that, I'd get onto that earlier rather than later. So that's probably a key one, Greg, because if we're having this discussion again next year, it'll be too late.
Good insight, Fee. And around that, Matt, I know one of the things that you advise your farmers with is around, this coming up to the end of the financial year and just prepaying some of those expenses where appropriate, predominantly variable costs, but there's a few considerations that need to be thought through coming into that process, isn't there? What are those, mate?
Yeah, good point, Greg. Obviously, I only recommended it on the accountant's advice, but you really do actually need to seek advice on this, because for some people it may be more a cash flow consideration because they may not actually have a tax issue, and so doing what the neighbour has done and race down and suddenly prepay some bills may not actually make a lot of difference to you, but it could make a hell of a difference to your cash flow. So determine what your position is. If that's an option, and I do know a lot of accountants are fairly favourable to that option, don't, as everyone said, don't leave it to the 30th of June and head down and say, I want to prepay, because a particular company may not do it, because remember, you're passing your tax issue onto them, and they may not want to do prepay, especially if their year has been quite profitable. I always say you only prepay to someone that's secure. because you will go into, get into trouble if they fell over. And I probably recommend, if people are doing it, to just pick a couple of the bigger ones, and in terms of not so much companies, but bigger expense categories, typically, feed, fertilizer, those sort of things, because having 20 small operators prepaid is harder for you to keep track of. But also it probably opens up a little bit of risk to some extent. But remember, it is a pretty good tool to shift it is putting the cash flow burden onto the next couple of weeks. So you've got to have the cash there or the credit to be able to do that, or access to credit to do that. But it does shift a fair bit of cost out of that first quarter or so of the financial year when, costs are high and income quite often is a bit lower. So great cash management tool. Be careful with it. Do it under a considered process with the accountant in mind, but has been very successful over the years. But do just remember, not everyone may not. Someone that did it last year may not want to do it this year. So ask the question before you race down there.
And then remember to tell Matt that you did it, so that when he comes out to do your farm analysis, he knows not to factor in that cost for this year.
Absolutely, and people are getting better at that, but. It did, the 50,000 or so prepay on FERT used to always get forgotten, but you are quite right. Good point.
Tom, we've seen a general increase in farm input costs over the first 6 months of the year. Obviously, that trend's not going to change. What are you seeing, mate, and what are some of your insights there for the short to medium term?
Yeah, so I always reckon, we talk about terms of trade, we often think about milk price, what our grain price is, those sorts of things. My experience, one of the biggest influences on terms of trade is what your seasonal condition ends up being. At this stage, Australia's a big country, lots of variability, but a number of the key dairy regions are having pretty good run for the last few months at least. And so that's going to have a big influence how well the spring unfolds as such. We've definitely, as we know, the oil price, so the fuel prices have gone up a lot. We can factor that in relatively easily from a budget point of view. Paying for it's different, but we can estimate the cost reasonably well. And it's the same with our nitrogen fertilisers, that we know that they've nearly doubled, so we can fix that up. The one that's proving a bit more challenging is the flow-on effect that particular fuel is having and the oil is having onto many other cost categories. So we're seeing it simply in just things like extra transport costs, and fuel surcharges going in there, but also a lot of the products we use are packaged with oil-based products. And so that we have pushed a flow-on cost there. Some of the ones we're seeing is, for example, our silage contracting is going to go up because more fuel, higher costs getting passed on then, but then our silage wrap made from oil. So we're going to see potential shortage and increase in cost in that one as well. So it's a little bit harder to factor in exactly what those ones are going to be, but some estimate is better than none. But as painful as it is for some people, it's almost a line-by-line case when we go through a budget to assess each one and think through, will this one have extra transport? Will it have extra packaging costs? Is it likely to go up or not? Because we're certainly seeing that a lot.
Good stuff. And Fee and Matt, I know you both keep an eye on the numbers on farm at present. I'd imagine you're both seeing the similar things with those costs starting to flow through accounts at the farm level, things like fuel and oil and those general considerations. How are your farmers responding? They're obviously keeping track of these sorts of cost increases?
Yeah, I think certainly, and I've done it with a couple of my discussion groups now as well, just looked at year-to-date figures. So I actually just looked at the variance to last year. I certainly know with one of those groups, fuel and oil already at year-to-date, and we probably looked at that about 2 months ago, was up 25% across the year. Wow. Keep in mind that won't necessarily all be the increase. It could be changes in some other things they're doing on farm, but I think for most of them, they would have said that's where it's coming from. I think we've got a slightly confounded thing with, say, the regions that were in drought, because a lot of them have actually ended up with a double whammy of fertiliser this year. Their autumn blends actually went on in this financial year because they were actually put on basically in winter last year because of how late the season was. So the third one's probably been a little bit harder to judge on the increase, but I agree with Tom. All of those categories are going up, and then it's just been mindful of any supply constraints for things. Silage wrap, as Tom said, polypipe, anything that's essentially coming from a petrochemical-based thing could be problematic. Matt, I don't know whether you've got any extras on top of that.
Look, I'm certainly just doing those numbers, and some people like to do it in depth, and others like, essentially a bit of a skim over. Not that it's not accurate, but I had a good scenario yesterday where someone was working through that notion of what is the extra cost just in nitrogen and PKS fertiliser is going to be. They had some recent soil tests, which was great, and we were able to determine that, probably in spring there may be the opportunity to cut back on, a bit of PK and S fertiliser, but, we're still planning to use nitrogen. And we just played around with the impact on, what that meant for cow numbers and stock numbers and the business in total. So rather than sort of jumping into any knee-jerk reaction of, everything's going to cost more, so I'm going to cut numbers, we actually did it quite rationally and said, yes, it's going to cost more, but what is the cost? Well, what is the loss of income from dropping numbers? And the drop in income was far greater than the increase in costs. So, being really aware of those issues. Everyone's situation is a bit different, but I think working through it is in a planned way is the way that you get the better outcome, I think.
Tom, you touched on this around some of those supply chain challenges on key inputs like animal health products and so forth. Alternatives are not always identical, though, are they, Tom?
Yeah, so we're already seeing, and we're likely to continue to see, some shortages across different things, whether it is because of the fuel and fert crisis causing the shortages, or at the moment we're also dealing with some animal health drugs shortages as well. So it's just important to try and do as much planning around how you're going to deal with it, because price is one aspect, but not getting what you need when you need is also a massive issue too, if not a bigger issue. And so it's just planning out what you need and trying to secure it well ahead of time. So it's not encouraging everyone to go and hoard excess stuff, but it's just trying to put your name on stuff. So, for example, silage wrap in the spring, we need to think about, we're going to need it. Let's start communicating that now. The other one, for example, is we're seeing that animal health products, some of them are in short supply. Dry cow is an example of that. Had a case the other day where the farm was recommended, well, they didn't get the desired dry cow drug, and so they used alternative products, didn't have a plan around it, had one of their worst mastitis outbreaks at calving as a result of it. And so it's just simply doing a plan saying, if we can only get so much of this particular drug we want, how do we work out which cows priority get that? So rather than blanket try and get every cow to get it and they can't, which cows do we actually select that'll get that, and which cows can we look at using alternative product or process with? So it's just trying to plan that out. If you're not sure how to do that, for example, work with your vets on that one, because they're well across the shortages. It's making their life quite difficult at the moment. So it's just working out the plan of what to do if you can't get what you need when you need. But first of all, preventative is always better. So let's try and make sure you secured what you need to secure ahead of time, rather than hoping to turn up on the day you need the dry cow and then finding out you don't have it.
Good stuff. Good insights, Tom. Appreciate that. So now let's talk about one of the biggest challenges of more recent times is around interest rates and interest rate impacts. So maybe thoughts from each of you just around key considerations, principal holiday, the necessity around capital expenditure, those sorts of things. So, Matt, what are you hearing with your clients, and how are you advising them around interest rate impacts and so forth?
Look, I'm certainly encouraging them to have a chat to the bank, but more than that, I'm encouraging them to know your position. And if you know your position, you can actually then approach these things in a pretty planned way. If you know that you're going to have a cash deficit on opening price and the way the input costs are looking, and perhaps your seasonal conditions in the area you're in, you can actually start to be proactive and have that conversation with the bank. If you're on principal repayments, monthly principal repayments, is there the scope to pause that for 3 months or 6 months or 12 months? And equally, if you know you're going to be short with creditors and paying some bills, having the conversation is far better than getting the phone call and essentially saying, we don't want to supply you anymore because you haven't paid your bill. So, being aware of your position and having those conversations is really critical. the interest rate environment, is probably equally volatile. I read something the other day that I think banks are split whether there's going to be a lift or a decrease. So, there's a lot of uncertainty out there at the moment. So, being informed and keeping in touch with your bank is absolutely critical, and your suppliers.
B, how are you advising on certainty in an uncertain world with your farmers?
Yeah, and I think probably with the interest rate one, and obviously the banks are split at the moment. I still think a lot of the agri-lenders that I'm speaking to are still factoring in rate rises when they're running scenarios and looking at finance for farmers.
Sure.
Most of them, I would say, are still factoring in an extra 0.5%, probably up to 0.75 in sensitivity. I know some banks probably even going higher than that on sensitivity analysis. So I think that's something to definitely be aware of. And I think, as Matt said, if it looks like that's going to be a cash flow problem, then probably considering capital expenditure, being on the front foot with your banking creditors. Banks are more likely to be happy to give you money if you come to them a couple of months in advance, rather than saying, oh, by the way, I'm short on cash, I need it tomorrow. They don't love that circumstance. And I think it's a bit like getting a milk income estimate. It's one of those ones that I would still encourage people to go and shop around. There's no harm in also speaking to other banks if you've got capability to do that and you're in a strong position, just to see what your options are. So I think, it's just one of those ones to be really mindful of in your business as well. Matt, you're about to add something?
Yeah, just on that fee, I think you're quite right. People are quite happy to shop around on feed and fert and even veterinary supplies these days, but are much more reluctant on some of those key overhead costs that sit there and are damn expensive. Insurance, those sorts of things. Don't be scared to shop around and see what someone else can do for you, and that might just leverage a bit of pressure on who you're with at the moment to sharpen the pencil, if you like.
And you may, as you say, Matt, you might end up with the same bank. It might be your own bank sharpens pencil and you end up there. Again, it's one of these ones that if it's the difference of 20, 30, 40, 50,000 or more, probably worth changing your bank account numbers to get the benefit of the lower interest rate.
Tom, what's your perspective on this? Again, we've touched on some of the false economies around fert and feed, and I know you're particularly big on budgeting around those elements too, right?
Yeah, so once again, it's a bit of a theme we've got today, but know your numbers. It can really help with your planning a lot. And so there's a lot of these things, like we're talking about the interest rates, whether it goes up 0.5% or 0.75%, not very difficult to add that into your budget to see what that looks like. It's more how you respond that also matters. And so just thinking around things like, one thing I've noticed, I reckon, the last 5 years, Greg, is that we've seen milk price go up a fair bit compared to what it was, say, in the year 2020. So we almost seem to have a step price. We know it's not as high as we'd like. It's always the case. But also we're seeing a lot of our costs have gone up with it. And so we've got a lot of our fixed type costs, think whether it's labour, a lot of those type of things have gone up significantly. The one that I don't think for a lot of farms has gone up as much is feed costs. So your grains and your things like that. And so a common response was when we had really tough times, I'm thinking right back to 2016 and those sorts of things, often our best defence for dairy farmers was to try and minimise our costs as much as we could during those periods as our strategy to try and get through. With the relative feed to milk price cost for some farms, not every farm in Australia the same, but for quite a few, trying to wind back some of those costs might, and this is what Matt was indicating, might hit the budget a lot harder. And so just make sure you understand what any potential changes in strategy might do to your overall outcome. So if you decide, right, we need to save money, we'll cut back on our grain, will it actually cut back on your income by far more than what it saved you in grain costs? So it's just trying to scenario plan those types of things and make sure that the decision is going to leave you in a better spot. And also, we can't just think of just today. Most people in business are in there for the long term. And so we need to make sure a decision we make today isn't going to have a flow-on effect into the future. So making sure that we are in the ability to still take advantage of when things do improve or make the most of good conditions if you do have them.
Yeah, that's a really key sense Tom, for sure. And Matt and Fee, you've probably seen farmers that might have inadvertently sort of made a short-term decision that's actually had a significantly greater impact in the medium to longer term, right?
Yeah, I had this example. I'd harp back, and I think, Tom, it was well before 2016. I think there was a crunch time a few years before that, and someone made the choice to use some pretty ordinary. I think they may have actually just naturally mated some heifers, and they're good genetic testers, and they could see the genetic merit of that line of heifers coming through for years, and so they made a short-term decision to cut costs. They didn't AI. They used natural bulls, unproven, and they could track that through, and that just had an ongoing impact on their business. So absolutely, it does happen.
Good stuff. And just a quick note as well on some regional pressures that are appearing around this place. We've got a couple of mice issues in some of the more regional places of SA and WA, and there's a few locusts starting to pop up around the space too. So, Tom, are you seeing any evidence of that, or Fee, in your travels?
So I'm certainly hearing about it, Greg. Personally, haven't witnessed it too much, but we just need to be aware of what affect things, like even though you might not have mice running around your place, but you go and buy that load of cereal hay and it turns out they're riddled with it. So we just need to be aware of things like that, because not only do they eat the quality, but it's potential flow on things like botulism and stuff like that. So we just as always, it's just always something else we need to be thinking about a bit in that regard. So, Fee.
Yeah, and I think, look, same thing. I'm not seeing a lot of mice and locusts, but that's probably because I haven't headed over to Western Australia recently. I'm certainly seeing a fair bit of coverage about it. So one, just contemplating the impact of that for what might happen next year. And I was speaking to, I think it was another farm or consultant the other day, just in terms of there might be flow-on effects to grain prices next year, partly because we also know there's been differences in planting this year. So different levels of canola planted in particular regions based on the nitrogen thing, although apparently WA have got pretty good canola levels in. The counter to that might be that there's a lot more barley that's gone in. So it might just be that next year it's a look at different feeds. I think the other thing I have seen for I've heard more of this year for Southwest Vic farms and South Australian actually, the fact that farms have had to go in 3 times to get rid of things like slugs, and it's been a cracker of a year for red-headed cockchafer. So I think there's just some of those that have come back into some of the drought areas because, funnily enough, there's something there for them to eat. So I think there's probably been some impacts to homegrown feed potential just based out of this year. Matt, have you seen similar in Gippsland, or has it not been too bad?
Yeah, it's been really strange, Fee. We've seen just probably in the last few weeks done a number of visits where people have gone, this paddock just isn't striking, or I'm sure it's struck and it's now looking dead, and it's black beetle damage. Quite extensive African black beetle damage in parts that have never had it before. Tend to be, particular soil types that it seems to go with. But yeah, just if you've got something happening in a paddock and you're not sure, or that the reso that you put in is not firing like it should, if you don't know what you're looking for, grab the agronomist or someone that does and get on the hands and knees and just scrape around. You don't have to scrape around much, and you'll find them if they're there. So yeah, that's just been one that's been out of the box a bit this year.
And I think it's one of those ones, like, it becomes even more crucial this year with urea prices where it is. You don't want to be going and putting N out on pasture that you're looking at thinking it's struggling a bit, but you want to know why it's struggling. Like, there's no point going and putting out 1,400 a tonne urea onto a paddock that's got substantial pasture damage if it's not going to respond to it. So same sort of thing, isn't it, Matt? You want to know what's there before you go and put out urea and see whether you get a response.
Absolutely.
Spot on. So as we move into the close of our webinar today, I'd just like to touch on more of these tactical decisions around herd, feed and water. Matt, I know you've got some rules of thumb that you really like to advocate around testing and trialling responses.
Yeah, look, that's right, Greg. And there's some previous webinar. If you haven't seen them, feel free to go back and look at them on nitrogen and the value of nitrogen. But just bearing in mind the critical elements to getting the value out of nitrogen is the response rate, the utilisation of that extra feed grown, and the cost of the alternatives. They're your three determinants of the profitability of nitrogen. So when we talk response, and I'm not going to go into a lot of detail of it, but we typically throw around 10 to 1, and a lot of people actually don't really know what that means. And as crazy as that sounds, that's just a fact. So what we're talking about is the response of extra dry matter grown to the kilo of nitrogen. Now, 80 kilos of urea, 37 kilos of nitrogen. And so we're talking at a 10 to 1 response, an extra 370 kilos of extra growth above what we would have grown with no nitrogen. So that's what we're sort of looking for. And again, your agronomist or advisor can help you sort of assess that. But response rate's critical, and understanding what are the drivers of that response is absolutely there. So base fertility, soil moisture, soil temp, sunlight, day length, species, all help determine that response rate. Utilisation, how much of that extra feed grown are we going to eat with cows or conserve down the track? So that's the utilisation issue. And then the cost of the alternatives. If I don't put it on, what else can I buy to actually replace that nitrogen boosted grass, and what's the cost of that? They're the three critical elements to determining that response, or the profitability of nitrogen.
Good stuff. And Tom, on the moisture perspective, I know there are some challenges to irrigation allocations, but also some stock water supply challenges. Tell us a bit more about those, mate.
Yeah, so as you say, there's two different things going on. There's one just talking about stock and domestic water, just to simply have something for the cows to drink or wash the dairy down with. And different regions have got different pressures on there, because we're seeing some regions have responded pretty well with rainfall coming out of the drought with grass growth, not necessarily filled dams yet. So some of those guys will have some pressures to deal with and work through in that regard. And even in some other areas like, say, northern Victoria, where farmers have traditionally relied on channels to supply their winter water, we're seeing a definitely change in strategy from Golden Murray Water with how they manage those channels. And they're often basically draining those channels to manage weeds and silt and stuff like that without a lot of warning. So we're seeing that farms now have to they've always been told that we might not have water for those periods of the year from the 15th of August to the 15th of May to 15th of August. But we're seeing channels that have never been drained before getting drained. And so need to have those backup water plans, have the dam or the bore or whatever it might need to be. So that's one aspect. And the other aspect, what's happening with the irrigation side of things. So we've seen after having a really wet run in the early 2020 to 23, the dams have dried down quite a bit. While we've had some quite decent recent rain, unfortunately, it's still not resulting in great inflows, which is not uncommon, because most of the really good inflows happen from August, September. And so we're a bit early for that still. And so we're facing the possibility that a lot of the big irrigation systems, particularly in northern Victoria, southern New South Wales, the outlook, when you combine with what the likely inflows are going to be, combined with the weather forecast, as unreliable as that can be. A lot of my clients, for example, in Goulburn 1A water system, they're sort of budging on about a 50% allocation next season. And in the Murray system, zone 7, 70% allocation is a fairly common number to be budgeting on, taking all that into account. And then when we look at an often underestimated system, the New South Wales General Security Murray system, it's likely to have a very low allocation at this stage, and it's a significant contributor of water even to Victoria. So a lot of farms don't understand what impact that has on temporary water prices if there's a low allocation there, because they're often a seller back into Victoria. And so all that's saying, Greg, is that we're likely to have unless we get really good inflows, a very challenging year ahead with water prices and availability in northern Victoria, well, southern Murray-Darling Basin, I suppose, is a better way of putting it. And so that's just saying, well, do you need to plan around it? Can you do anything to try and protect yourself? We're seeing with a good autumn, a number of farms are going to be carrying more water than they thought because they didn't end up using as much. Water price has gradually eased off a little bit as a result. But history's showing me that when things get dry, water allocations are low, the rate that water prices can escalate can be very quick. And so in 2018 through to 2019, we saw it go from trading around $200 to $600 to $800 very quickly. But then when we finally got good inflows, it took a number of years for it to get back to be quite cheap water again. So it seems to be able to go up much faster than come down. And so we've got mechanisms around being able to carry over water and those type of things we could be looking at. So it's just well worth thinking. And for people that thinking it's too late, you do have until about the 29th of June to be able to do water trades still. And
Gotcha.
And another common one I'm seeing with my client base is some of them will have, if they don't plan it, are going to have a reasonable tax burden. Buying temporary water is tax deductible. And so it's going to have the double whammy for them. So if they've got the cash flow, they can buy it on the water, end up paying less tax next year, and also then don't have to find the money to buy that water next season as well. And so for some farms, it's well worth not deciding it's too late, but well worth considering it, because my personal view is that upside of how quickly the water can go up is much greater than the downside of how it might come off in price, how we're currently situated.
Really good insights on a critical input there, Tom. Just as we close, Matt, Fiona, Tom, just a final reflection on your farmers or farmer groups, maybe some of the things they're doing particularly well to manage through the current situation. Maybe Matt, you first.
Yeah, thanks, Greg. I think one of the things, and I think they learnt this last year with the fodder shortage, is be really hard nosed about some of your stock numbers. Look at passenger cows, look at empties, look at carryovers, look at beef. Most people aren't beef farmers as well as dairy farmers, so just being really hard nosed about your situation, because it can make a big difference to fodder requirements and feed requirements and your cost structure of your business if you've got this pool of unwanted animals floating around for an extra few months.
Good stuff. Thanks, Matt. Fee, your sense?
Yeah, look, most of the clients I'm working with it's not, it is pretty much just trading as normal, I would say. I think there was certainly a fair bit of uncertainty at the start when the conflict started, but I think a fair bit of that settled down in terms of knowing at least that we're going to get diesel. We should be okay for urea for at least a period of time. Who knows what this wonderful super El Nino is going to do, or whether it will actually exist. So I think there's certainly some that would consider that. Most of mine are more looking at the concept of proactive management around anything they think might be in short supply. I think there's still good margin of milk this year, as Tom said. So feed prices are still comparatively good at the moment. Some pressure coming out of New South Wales given their seasonal conditions. But I think it's more farmers just running their numbers again and saying same thing. What's the ideal stocking rate based on where my milk price sits and where my costs are going to sit, and how am I going to drive the best margin out of my business? That's what most of mine would be looking at. Yeah.
Good insight, Fee. Thanks a lot. Tom, closing thoughts from you on this?
Yeah, so identical to the like Matt and Fiona. Most farms I'm dealing with in the groups, they're not looking to wind back too much. They're looking to try and maintain cow numbers, but no passengers, obviously, Matt, and also keep the milk production going when it's reasonable to do so. And the only thing I'd add to what they're doing, because it's getting really very well recognised, is there's a real loyalty tax nowadays. So if you're staying loyal to your milk company, to your insurance company, to your bank and all those sorts of things, you're probably getting a worse deal. So that they're realising the value in spending that bit of time to go and shop around and make sure they're getting a reasonable price, even if it's just the comfort in knowing you're getting a reasonable price by checking.
Good stuff. Well, as we come to a close, a big thank you to Fee, Tom and Matt. We've covered a lot of ground today, but I think the key messages are clear. First, understand your income estimate properly. Don't just focus on the headline milk price, and don't budget on income that's not guaranteed. Second, know your numbers. That means both financial numbers and physical farm numbers. It does not need to be perfect or complicated, but it does need to be current enough to support decisions. Third, seek advice early, whether it's milk price, tax, cash flow, finance, fertiliser, feed, herd decisions or water. Early conversations usually create more options. And finally, avoid false economies. In tighter margin years, the cheapest decision today is not always the best decision for the season. Thanks everyone for joining us, and we encourage you to follow up with your regional Dairy Australia team business advisors, service providers, or industry contacts as you plan ahead. Thanks for joining us. Have a great day.
Thank you for joining today's DairyPod episode. We hope you found it enjoyable and insightful. For more information, check out the episode notes. You can stay up to date by following DairyPod on your favourite podcast platform. To get in touch, visit dairyaustralia.com.au. Until next time, take care.